It's a part of life no one wants to talk about, but today on Your Money, we're talking about death, how to write a will and a living trust. Our legal expert breaks down the basics, plus life insurance, how it works and how much do you need, and funeral scams. We'll tell you what to watch out for. It's all coming up right here on Your Money. Welcome to Your Money. I'm your host, Gordon Severson, here to help you save, spend, and invest your money wisely. End-of-life planning can be a tough and emotional topic, but it is important. That's why we're giving you some tips and advice on how to start planning right now. A little work now could save your family a mountain of problems and headaches down the road. If you have a plan, then your loved ones can focus on grieving and not have to worry about what will happen to your money. Ryan Wooten explains why a plan is so important.
It's so important to have that final farewell and to be able to say goodbye and not feel under duress because of finances, for sure.
Funeral director Jim Fernald says when you lose a loved one, the last thing you want to worry about is how you will first pay to bury them and how you will second survive financially in their absence.
We don't know the day or the hour as to when we will die.
Owner of Kiley and Foley Funeral Service, Joseph Kiley, says the cost for a visitation, burial, and funeral service can range from $7,000 to $10,000 or more.
And if you haven't had those conversations, then you're trying to sort out what are we going to do, what do they want, what are the family's needs.
Most people do not have that kind of money in place.
Harris says life insurance doesn't just cover funeral costs, but the money also helps take care of the loved ones people leave behind. Fernald says he works with grieving families daily. He says being financially prepared gives families one less thing to worry about.
Having a plan in effect is certainly a less burden on the family. Knowing that they're doing the wishes of the individual is really key.
Fernald says communication is key. Families should have these conversations early so they can properly carry out their loved ones' last wishes. One of the ways to soften the financial blow of death is to have life insurance. The number of Americans who have life insurance is at its lowest point in 10 years. People have a lot of questions when talking life insurance. Do I need it? If so, how much coverage do I need? Jason Wheeler breaks it all down.
The next installment in our life checklist, again at the insistence of my boss, very positively renamed from my less appealing original title. This list is meant to make sure that we are ready for the end of life. And this time we are talking about life insurance. The latest numbers show that about 52% of Americans have life insurance coverage. That percentage, though, was at a decade low. First, how do you even know if you need coverage? There are some different opinions on that. Generally, though, it's recommended for parents or grandparents with dependents, as well as stay-at-home parents or spouses, breadwinners, small business owners, and for anyone who worries about leaving debt or funeral expenses to their heirs. Now, looking at all of that, and then looking at that again, it seems like we may have a lot of people who are not insured who may need to be. So let's discuss some amounts, again using the latest stats. The average policy taken out is about $178,000. Is that enough? For some people, it may be more than enough. For many, though, probably not. The guidance says you may need up to 10 times your annual salary, or even more than that if you have young children. But as with everything, cost is a huge consideration. Let's look at some costs for $500,000 in coverage. They are all over the place, depending on if you are male or female, smoker or non-smoker, younger or older, healthy or not so healthy. It also depends on the type of life insurance, though. Is it a less expensive term policy where you usually pay the same monthly premium and have coverage for a set time like 10, 20, or 30 years, and then it expires with no benefit if you're still living? Is it universal life where you can build cash value, but your premiums can go up significantly with age? Or is it whole life where it'll cover you for your whole life and has cash value that you can dip into, but it's usually the most expensive? There are so many options. So I'm explaining them more, and I'm linking you to a cost calculator in my latest article posted at Jason Wheeler TV on Facebook and Twitter. Whatever you decide to do, tell your family and your beneficiaries about this. A lot of life insurance policies don't get paid or they go unclaimed because we don't communicate this stuff.
That is a lot. Now, since premiums can vary widely, there are tools online like life insurance calculators that can help you figure out how much you actually need and how much you should be paying for your coverage. Coming up after the break, do you have a will? I sit down with a lawyer to discuss the legal do's and don'ts and misconceptions about end-of-life planning. So stay tuned. A vast majority of people don't often think about death and creating a plan when that actually happens. So I thought it would be very intelligent, very smart to bring someone who does that every day, someone who focuses on end-of-life planning. So I've got Brenna Galvin, who is an attorney in our area, and you focus on a lot of these topics with your practice.
Yes, I do. I'm an elder law attorney and a death doula, so I talk about death most of the day, every day.
For a lot of us, it's an awkward conversation. It's things we don't want to talk about. We don't want to think about dying, but I thought it'd be great to have a conversation and to give our viewers some advice and some ideas. I think the first thing that we should start about is, where do people start? How do you start to create a plan for all of this?
That's a great question because it's very overwhelming for people. I think that most of us are death avoidant. We fear that if we speak it, it will come, or that it's going to force us to face some difficult conversations to navigate with either our families or with our finances. And so the first thing I think that people need to do is remember that we're planning for the worst so you can live your best. We really want to make sure that when you're thinking through your end-of-life planning, you sit down with an experienced elder law attorney who knows how not only to draft the documents, but also how they're going to need to be used when the time comes. The other thing I would say that's important to do is to build your team. And I think of that a little bit like a personal board of directors. We want people around you like an elder law attorney, a financial planner, a CPA, your trusted family members and cherished friends, and your care providers to all know what your wishes are. So then once we get through building that team, structuring the documents, I really encourage my clients to have the talk with their loved ones. And we think about having the talk when we have kids coming of age, but I think about this for adults as we start aging and thinking about what we want for our futures. And as we navigate things like diagnoses or health crises, we want to make sure that our loved ones know what our wishes are, they know where to find these important documents so that they can act in our best interest when the time comes. And then I tell people, once we do that, it's just reviewing regularly.
I know a lot of people immediately think of a will, so I think that's a good place to kind of go to next. What is a will? What does it all include? And how do you go about writing one?
Right. So a will is just a legal document that says where you want your assets to go when you die. It's really focused on transition of wealth from one generation to another. And not just assets, but also personal property or things that have sentimental value to you. You can outline what you want to have happen with those when you're gone, and then who you would want to administer your estate for you. Who is the one doing the job of collecting those accounts, liquidating those assets, and distributing them to the beneficiaries you name. And how you would create one is, again, to sit down with a professional. I know that there's a lot of DIY options out there. I really encourage people, though, to work with a professional who knows and can get to know you and what really matters to you. Because we can have two people in my office, same amount of money, same number of kids, with totally different plans based on what matters to them.
What are some things in a will that people should really include? Make sure that they clarify. I know a lot of people also think about their funeral arrangements, things that are outside of money. Is that typically included in a will, like what you want to happen when you do die?
You know, a lot of those other choices related to our what happens to our bodies when we die actually occurs in your healthcare directive. That's sometimes called an advance directive. It used to be known as a power of attorney for healthcare. And in that document, we talk about not only what happens with your personal well-being choices if you need care and you're unable to communicate those for yourself, but it also allows you to say where you want your remains to go. Do you want to be buried or cremated? Now in Minnesota, do you want to be composted? Whatever you wish for your body, and then your healthcare agent can assist in making sure that those arrangements are made.
And another type of document that people might draft is a living trust. If you could explain how that works, how is that different?
Yeah, there's a lot of confusion about whether people need a revocable trust. It's sometimes called a living trust, an inter vivos trust. It goes by many names, which doesn't help with the confusion portion of it. But a revocable trust is really an entity that's being created. And there's three parties that are involved in it. The person who creates the trust, that's sometimes the settlor or the grantor of the trust, the trustee who's going to be managing it, and then the beneficiaries that are listed in it, who are ultimately going to benefit from this trust. And that relationship is structured to really take you through three stages of life. The first is when you're healthy and well and you're setting it up and able to control how you want your assets to be managed. You're the person wearing all three hats in that situation. Mm-hmm. You're the person who created the trust, you're the person managing it, and you're the beneficiary during your lifetime. And then it takes you through a period of incapacity planning. And that's where, if you can no longer manage these assets for yourself, who's going to take that on for you? Who and how should they use the money to benefit you during that period of time, or benefit anyone else that you'd like to include? And then it goes through the post-death planning about where you want those assets to ultimately transition upon your death. And so because it's this entity that's created, it doesn't die like a person does, right? That trust entity can live on beyond your lifetime and can provide a lot of clarity to the survivors. And because it's not a person, it's an entity, it also gets to avoid a probate administration. And probate's a court-supervised process for managing and subsequently liquidating the assets in the estate. But throughout that process of probate, the court supervises in many situations what's happening. And so that can be costly for families to administer because it takes time. It takes usually legal representation to go through it. Mm-hmm. And so often people seek trust to avoid that probate and sometimes to minimize taxes as well.
Yeah, that was going to be my next question, is why would you want to create one? And also, what does it all do for someone?
Right. So a lot of the trust contents, what we put in the document, dictates why we're structuring it, right? So let's say that you have a family member who you want to benefit ultimately from these assets, but they're going through something really difficult in their lives. Maybe they're having issues managing money themselves. Maybe they're minors who aren't yet old enough to manage the funds. Maybe we're concerned about addiction issues, or they have a disability of some sort. So we need to protect or structure those assets for them instead of leaving them outright. Sometimes people create trusts to also benefit the beneficiaries and provide a structure or plan for them. And then some people are really concerned about minimizing taxes as well. It's a smart thing to do when you can. It's within the confines of the law, so you can really be planful about if there's concerns about Minnesota estate taxes, for example, which would come into play if someone had assets that are over $3 million in value. Mm-hmm. You can put together a structure in that trust document that allows the trustee to minimize those taxes upon your death for the beneficiaries you leave.
I've heard that some people maybe will have trusts if they have a child that maybe an adult and has disabilities, so they can kind of structure things so they get the money they need, but they might not have the knowledge or skills to manage the money themselves. Is that another reason why someone might do that?
Definitely. So when you're planning for a beneficiary with any sort of special needs, especially if they are receiving disability benefits, sometimes those benefits are contingent on them having a level of impoverishment or only having a certain amount of income and assets. And so the idea of structuring it through what's called a supplemental needs trust in Minnesota allows them to continue the receipt of their government benefits like medical assistance that helps with their health care and those important care providers that might be supporting them, as well as making sure that they preserve any income benefits that they might be receiving through supplemental security income through Social Security.
This all seems like a lot of things to think about, a lot of paperwork. One thing I'm curious about is, with all this extra work and all of this planning, what would be the benefits? Why would someone want to go through all of this? Like, can it really make a big difference for the family members once you go?
Yeah, great question. I think that one of the things that I notice when people go through this process is the level of relief they feel to know that not only are they taken care of during their lifetimes, but they're structuring this so that their beneficiaries are also taken care of. And they do that in the most streamlined way possible. Often we talk about how this is a gift for your family and the people you leave behind. When people don't do appropriate planning, sometimes the process is a lot more challenging for their survivors, or even if a parent or a loved one's incapacitated and you have to step in to help them, if you don't have the right legal documents in place, often our only option is to involve the court. And as I mentioned before, that can be a costly undertaking. And it can take a lot of time during a period of your life where you'd rather be spending that with your loved ones and processing your loss. So in addition to kind of the actual costs, there's also all of these non-monetary costs that are impacting your loved ones. And when we're grieving, we're not thinking our best, right? And so we want to make it as easy as possible for those people that we leave behind, so that the whole process of going through the loss doesn't consume their life.
On the flip side of this, what happens if someone dies and they don't have any will or any sort of directive? I know we've heard of situations with, this happening to famous celebrities, and it's a long, drawn-out process. What happens in that situation?
Well, the good news is the state of Minnesota has a plan for you. So there's some defaults structured in the law to ensure that your estate passes to your heirs, and heirs are defined in kind of this lineage or family tree within Minnesota statute. And so often if you have a spouse or kids, they might be included. Your parents, if you don't, might be included, or siblings if they don't survive, then nieces and nephews. So often we have to figure out first, who are the heirs of your estate? We have to, again, seek court involvement to petition as an interested party to say, hey, we need help administering this estate. We need someone to be appointed. And then we need clarity from the court as to the heirs and the survivors that would ultimately receive. And that process, again, is just very time consuming. And there are delays whenever we involve a third party in the administration of your estate. That means that we have to rely on their timeline rather than ours. And when you're going through incapacity or a death, sometimes those decisions have to be made in a really short timeline. And sometimes the survivors don't always get along. So that lack of clarity or that lack of specificity for how they go about it really creates a lot of problems for the survivors.
Is it like it is in like the movies and TV where like someone just married someone a few weeks ago and then dies and everyone's worried, like, and then they get everything, and like the kids or like the people that really did know that mother or father don't get anything? Like, is it really like that, or do the courts really take more things into account with making those decisions?
Yeah, so if people don't have mutual children, the spouses do have rights to the estate, but so do the children that survive. And often there's some bad feelings among those survivors about what they think should happen versus what's required under the law. That's why whenever we have blended families, which is now the norm, right? For multiple people to have maybe second marriages or other children or other beneficiaries that aren't children or spouses that matter a lot to them. We want to make sure that your family, be it chosen or be it that you've created, is the one that ultimately receives the resources that you want. Or if you have charitable intentions that you want to leave, or organizations that you want to support after your death, that those things happen. I always say that part of your estate planning is preserving your autonomy. A lot of what we talk about is what happens if you can't do this anymore, but with that, they get a choice, so you get to choose who's involved, right, in the management of your assets or making decisions about your health care versus having a priority set by Minnesota statute.
And I've heard also that besides these legal documents, that it's also important to look at your individual accounts, because I have heard in situations where if you have it written as a beneficiary in that account, that can actually trump some of the legal documents. Is that accurate?
Yes, you're right. So assets pass in a few different ways upon death. The first is through joint ownership. So if you and I have a jointly owned checking account and I pass away, 100% goes to you as the survivor. Even if my will says I want to leave it to my nephew, right? And so joint ownership is one way that assets pass upon death. The second way is through beneficiary designations, like you were talking about. This is really common with retirement plans or life insurance, where you've named someone that you want to receive that particular asset. Now, if you, after that, sign a will that says, actually, I want all of my estate to go someplace else, that beneficiary controls. Think of a beneficiary designation like a contract between the financial institution, you, and that account that dictates where it's going to go upon your death. And so those things, joint ownership, beneficiary designations, trump whatever is put in your will or trust. And that's why there's some coordination between that helps to have a trusted professional guiding you through. Often I ask a lot of information from my clients about their finances, how things are titled or beneficiary designated, because we want to be sure that they all coordinate at the end.
Yeah, because I'm sure there has been cases where, you know, someone has a 401k or a retirement account and they maybe have their ex-husband or wife on it, and you don't think to change the beneficiary. 10, 20 years later, you pass away, and in your will you have your new spouse written, but you never made it the change on your retirement account. I could see something like that happening for people.
It happens a lot, unfortunately, where we don't always do a good job staying on top of these big changes that happen in our lives. So I always try to help clients think about how they review this regularly, because there are going to be so many changes that happen over time with their health, with their finances, with their family situation. And so usually when we do estate planning, I say it's always good for you to pick a time of the year where you pull this out, dust it off of your shelf, and look at it to see if it still resonates with them. But then we want to make sure that for all those major life events, sometimes monetary related, retirement, or if they inherit wealth or something else, that those things, you come back to see an attorney to just review if there's any tweaks or changes, including sale of real estate sometimes as well. And then we also think about if there's a diagnosis that they have. Let's say that they've recently been diagnosed with cancer, and that diagnosis has really put things into perspective for them, made them think differently about what they want or who should show up in their lives in these really trusted roles. That's another time that we want to refresh to see if what they put down originally still makes sense. And then our families are always changing as well, right?
Yeah.
There's birth of children, there's divorce, as you mentioned. Those are really important times that we just review to make sure that we take stock of what's happening and that your documents reflect your life.
Well, thank you so much for coming on the show. I think a lot of us have a lot to think about. It's overwhelming, but it's good to try to break down things a little bit. So thank you so much for coming on the show and helping us out.
Thank you for having me.
Coming up on Your Money, planning for a funeral. Prices have skyrocketed in recent years. We hear from experts about how you can ease the emotional and financial burden of a final goodbye. Welcome back here to Your Money. Planning a funeral ahead of time can save your family thousands of dollars. You may be thinking, I can worry about that later on. But the truth is, none of us truly know when our time will come. And do you really want to roll the dice and risk leaving your family in a tough spot when you do go? Bill McGinty tells us why it's important to shop around to ease the burden on your family.
Emotions can cloud judgment, especially at a time like this. It can be sudden and shocking, and the last thing you want to do is think about money and shopping around.
It's emotionally driven. There's a bit of confusion in the family. There probably only 25 to 30% of the time has a funeral been what's called pre-planned.
That means it's paid for well in advance of death. 70% of the time, people scramble. Pre-planning locks in the price at today's rate as opposed to 10 or 15 years later, or hopefully a lot longer.
Incidentally, 83% of the time, people call only one funeral home. 83%. That's the industry survey conducted by the National Funeral Directors Association. Funeral directors know that. 83% of the time, I get the call. No one's shopping me.
It's not one size fits all, and shopping around before or during can save you thousands. In Charlotte, North Carolina, for example, you can find a traditional full-service burial for low end $5,500 or higher end $11,000 or even higher. If you really want to save and it fits your religious beliefs, direct cremation can be as low as $795, but up to $3,760. The result is going to be the same, but who does it and where it's done is what'll cost you more or less. You can also check the rating of the funeral home. After all, they will be the one caring for your loved one.
To give a little perspective, financial experts estimate a person's funeral will be one of the top 5 expenses in life. It's just behind weddings and buying a home. And with a lot of money on the table, funerals have now become targets for scammers. Jackie DeTore talked to one Pennsylvania family who almost became victims.
I was shaken. I was so mad.
John Markle had just wrapped up planning the final arrangements for his dad's funeral at Hefner's Funeral Chapel in York County when he got a phone call. The caller said he was this man, Liam, a funeral director at Hefner's.
He was overlooking our contract, and it said we didn't purchase the urn insurance or casket insurance.
The caller then asked for Markle's credit card to make the payment over the phone.
And it just didn't sound right.
So he hung up and called the number on a card he found from Hefner's funeral home. And
they said, no, it's a scam.
Then the scammer had the nerve to call back, this time spoofing the actual funeral home's phone number.
And then I told him, no, it's a scam, and people like you should probably burn in hell.
It's a nationwide scam, but it's happening in this county, and it's happening in other counties in Pennsylvania.
Ernie Hefner has been in the funeral industry for decades. He says these scammers are now scanning obituaries to find grieving families to target.
It's disgusting.
In this case, they found John's name in his dad's obituary just hours after it was posted. Then the name of the funeral home and a quick search on the website to pose as the funeral director, Liam.
It's pretty sophisticated and semi-believable if you're not thinking clearly.
Now Hefner's is giving this fraud warning to all of the families planning funerals.
So, remember, don't give out your credit card number, contact the funeral home right away, or if you suspect anything, just hang up.
Markle was glad he knew something was wrong and didn't lose any money. He just hopes his story will remind other families to ask questions.
Hopefully they'll get caught, but I doubt it.
Talk about scammers hitting a new low, right? Markle says he was glad he knew something was wrong and didn't lose money. He hopes his story will remind other families to ask more questions. As the price of a traditional funeral keeps going up, many people are now looking for cheaper alternatives. Julissa Garza talked to one funeral home owner who says more and more people are turning to cremation.
My granddad started North Little Rock Funeral Home Valentine's Day, 1955.
Jeff Smith and his family have been operating funeral homes in Central Arkansas for decades. He's seen firsthand the evolution of the business.
There's been a lot of changes in funeral service. It really started about 10 years ago.
Navigating challenges brought on by the COVID-19 pandemic, Smith says they've learned to serve families in different ways.
Before the pandemic, you never would have made funeral arrangements by video conference.
And they're also seeing the impacts of inflation.
We've had the most financial pressure I've ever felt as a business owner. This year, we have never felt the kind of pressure because everything has gone up.
Resulting in an increase in the cost of a funeral.
Prices typically double about every 22 years. Like all businesses, we had to raise our prices this year.
As the prices climb, people are planning ahead sooner than ever before. And Smith says more and more families are choosing cremation instead of burials.
If you go back to the 90s, probably 10% of our services end in cremation. Now, over 40% of our services, almost 50% end in cremation.
Smith says they hope to feel relief from inflation soon, but they'll always do what they can to help.
Funeral service is changing a lot, but at the end of the day, it's still about taking care of your friends and neighbors in their time of need.
Julissa Garza, THV 11 News.
According to a report from the National Funeral Directors Association, 60% of people chose cremation last year. They predict that number could jump to over 80% by 2035. Before we end the show today, I want to remind everyone that end-of-life planning doesn't have to be expensive. There are online tools that are very affordable that can help you draft a basic will. Many communities also have special programs that can help, but if you have a very complicated situation, say you own businesses, property, and multiple kids and grandkids, you might want to consider a legal expert who can help you make a plan. Think of it as an investment. Spending a little money now could save your family a lot of money down the road and a lot of worry. I'm Gordon Severson, helping you save, spend, and invest your money wisely. I'll see you next time.